So welcome everybody to the Be the Sniper or Be the Target webinar. My name is John Skelton with Apex Investing. And again, it's your choice. Make it today. Be the target or the sniper. As always, got to throw up our disclosures here. Trading involves risk. Make sure you know what you're doing before you do it. So if you've been with us on these webinars, what we've been doing is going back through each of the sniper trade setups. And the initial training is there that Daryl's done, but I'm going back through, and sometimes Daryl joins us, and kind of trying to simplify it a little bit. Okay, trying to dig in just a little deeper, help you understand a little bit of what and why is behind it. Okay, today we're going to be talking about the elevator trade. So let's take a step back, and before we get into the details, I want to help you really understand what an elevator is, and I want you to understand how it's different from your normal typical filtered TX trade. Okay, so quick question and quiz here. We see on this chart here the market comes up, pulls down, comes up, pulls down, and we notice right here it pulls down, and we see our detector here. This bar closes up. At the bottom we've got a trapped order, or an exhaustion box, and a trapped order. So that is a filtered TX trade. Happens to also be what? Anyone else tell me what else that is? You might not be able to fully see what it's plotting there. An ETX, right, which we're going to talk about soon. But quick question. Let's say what an ETX, let's say it's a regular just TX trade, right? Filtered TX trade. Do we take this trade? The market's coming up, pulls down a couple of bars, closes back in the direction of the trend with the TX. Do we take this trade? Yes. Right? As a TX trade, we take it. Everybody agrees with that. Okay? So yes, that is a TX trade that we would take. For one, it follows the rules, it lines up, it's not in coil chop, there's nothing, in our way. DR is the proper direction. We take that trade, that TX trade. Over here, we've got our detectors saying, hey, you've got a TX. The market's going up. We have a down close bar. Then we have a bar going back up in the direction of the trend. It's got an exhaustion box and trapped orders. The detector tells us it's there. Do we take this trade? No, we do not. And the reason we do not take this TX trade is because it's technically in what we call coil chop. Okay? Coil chop meaning as this market's coming up, this bar here is up, next bar is down, next bar is up, right? That's how we define coil chop, right? Up, up, or it could be down, down, but 3 in a row, up, down, down, it's coil chop. Everybody understand that? Okay? All right, so that's kind of the difference there. Okay, so just on a blank chart here, I want to help you understand something. All right, so on this chart, this market right here is in an uptrend on the left-hand side of the chart. Everybody agrees with that, right? We all understand how a trend in general works. Normally, it doesn't go from point A to point B straight, right? It comes up, pulls back, comes up, pulls back, comes up, pulls back, comes up, pulls back, right? We all know that that's normally how an uptrend would work. Same here, right? Pulls up, comes back, pulls up, comes back. Got it? Very simple, right? So let's just focus right here for a minute. So let's say this market came up, and then right here it pulls back, or it makes a retrace, you could call it, right? These 3 bars, right? It pushes up, then it retraces 3 bars. So whether you want to call it a pullback, whether you want to call it a retrace, a dip, we all get it, right? And if this up close bar right here had a TX on it and nothing in the way, we'd be interested in taking that, right? But then right here, when we've got up close, down close, up close, we stay out of those for our typical TX trades, right? Because it's coil chop. Then the market does another pullback or retrace or dip, whatever you want to call it. 1, 2, 3 bars. Then it reverses back in the direction of the trend, right? Then we come up here and we just have an up close, a down close, and an up close. We stay out of it. Happens again. Up, down, up. We stay out of it. Then it comes up, makes several bars retrace and pull back. Then it goes back in the direction. And in that situation, we'd be looking for a possible TX trade up to go back up, right? Everybody with me here? Nobody confused? Okay. So why do we generally stay out of coil chop? Well, with a regular, standard, standalone, filtered TX trade, we stay out of coil chop because sometimes coil chop could be the start of real chop, right? Okay. Coil chop is what we just said several times. Up bar, down bar, up bar. Okay? Or down bar, down bar. It's up, down, down. Okay? So we generally stay out of coil chop in our normal filtered TX trades because sometimes coil chop can show you it might be the starting of a choppy area, right? Everybody understand that's why we do it? Just like we normally will stay out if there's 2 clusters within 3 bars, because it could show like there might be some accumulation about to happen there. But in a trending situation, do we often see this where it's just one little coil chop and it goes? One little coil chop and it goes. We see that, right? Up here. We see it here, we see it here. So when we look at this situation, we could call coil chop. Remember here, we said, hey, market came up, makes a 3-bar pullback, 3-bar retrace, then it goes. 3-bar retrace, then it goes. Multiple bar retrace, then it goes. In a trending environment, you could call coil chop a what? A 1-bar retrace. Do you see that? Does that make sense? That difference there of a couple of bars retrace compared to just a 1-bar retrace. Okay? So that's another way to look at this. This is why another name for quote-unquote coil chop is what we call an elevator. Todd, you beat me to it by like 2 seconds there. It's what we call an elevator. Okay? Does that make a little more sense now? The difference of a retrace of several bars versus a retrace of a pullback of 1 bar. Do you also understand why we name it an elevator? We're going up a floor, up a floor, up a floor, up a floor. The elevator went down 1 floor. Now it came back up to that floor and it's going to go higher up the building. It's just a down 1 floor and back up and keep going. Down 1 floor. That's what an elevator is. An elevator is just another term for a 1-bar retrace in a trend. Coil chop in a trend, one one more time, in a trend, coil chop is just a 1-bar retrace instead of several bars retrace. Everybody got it? Does that help a little with a basic elementary definition of what an elevator is and what coil chop is? Okay. So, that just kind of sets the stage a little there of what we're looking at. What is an elevator? Okay. So, we do not trade elevators, or we do not trade 1-bar retraces in a normal filtered TX trade, do we? We stay out of those for our normal TX trades, right? We say, hey, that's coil chop. We don't trade that. We stay out. Well, tonight we want to talk about the elevator trades, which give you the potential ability to trade a 1-bar retrace and not always stay out of them. Makes sense? Very important. So identifying the target. What we're looking for, okay, is a TX trade. Well, we're looking for a TX that's early in a trend. Okay? So basically what we're looking for is the start of a trend, early in the trend. We get a TX, and it also has to have a pawl or a mini magnet. Okay? So we're going to add a few things here. Now, why do you think it's important that we only take these early in the trend? How many of you were on a webinar I did like 2 weeks ago about ODD divergence? I want to get your mind thinking about that scenario. Quite a few of you were on that. Let's get a little interaction here. Yes, you were there. Okay. Do you remember how I started off that webinar? One of the analogies I gave. You're at the bottom of the mountain. You're looking up that mountain, and you're about to haul butt up that mountain. And you just take off, right? You take off running. You're making some headway up that mountain. At some point soon, you kind of take a little bit of a breather, right? Take a little bit of a breather. You slow down. You're like, okay, catch my breath. I'm going to shoot off again. Put some more energy in and get further up that mountain. Right? And you might do that a couple times. Right? You might have to take a little break, a little breather, and keep going up that mountain. Eventually, at some point, you're going to get worn out. You're going to get exhausted, and you're going to run out of energy, right? So after your first burst, meaning your first move in that direction, your first move going uphill, upward, up that mountain, after that first push up, logically speaking, which one of your little breather breaks and then go is going to have the most steam, the most push? The first one, right? That's just logical. That first little breather and then go is going to have the most steam, the highest probability of getting you the furthest compared to the third, the fourth, the fifth, the sixth, and so on. Just very basic, right? Makes sense. Okay? So I want you to keep that thought in mind. Okay? This trade has nothing to do with divergence, but it's that same kind of analogy I want you to think about. Okay? So that's why we really only want to find one of these early in the trend, because that's what it is. Does that make sense? When we go back to that, what we were looking at a second ago about several bars pullback versus 1-bar pullback, right? Does that make sense? How these are like, okay, I'm taking a big break, nope, break's over, we got to go. taking a big break, pulling back, boom, we got to go. Does that make sense how this is go, go, go? Let me catch my breath, breather, boom. Let me catch my breath, breather, boom. See the difference? If you think about coil chop in a trend, or one bar pullbacks, or elevators, whatever you want to call them, think about them as a breather, or as a little bit of a fight. And they're just little breathers and then burst, little breathers and burst, right? You don't want to. That first one after a confirmed trend is normally going to be your best bet. So we want them early in a trend. Everybody get the concept? It's not hard, right? Now, do you also see how you probably don't want to take them if there's been more than one pullback? Meaning if the market goes up, pulls back, goes up, and then has one. Okay, maybe take it. But if it goes up, pulls back, goes up, pulls back. If it's already had some of those bigger pullbacks, you know what I mean? It's too much. Well, John, what do you mean by early in a trend? Well, I'm not saying the bar can only be the trend can only be 3 bars, but it can't be 30 bars. You know what I mean? And you can't have, oh, well, it went up and pulled back, up and pulled back, up. That's not early in the trend. If you've already had a nice pullback and then it goes back in the direction of the trend and you get one just a few bars later, okay. But if it's gone up, made a pullback, gone higher up, made a pullback, then gone, it's too far up. Got it? Okay. Now, what separates this? Like, here's where the confusion comes in for a lot of people. What separates this from just a normal TX trade? Well, we want a TX early in a trend, but there also has to be either a paw or a mini magnet also on that bar. Okay? The detector that shows you that a potential one there is the gold color detection. So what we're doing is we're taking the power of the TX trade, which we already all understand the power of that trade, right? We understand why it's powerful, that there's trapped orders going the opposite direction and we want to go the other way. We understand we like to see exhaustion down there on that bar. Okay? But not only are we going to look for exhaustion in that whole section of the bar, right? Because exhaustion is about several price areas of a bar. We want to add in rejection and weakness at an individual price level at the high or low of that price cell of that bar with a paw or a mini magnet. What does that mean? Okay, well, we know what a mini magnet is, right? It's that white line that's created when there's order rejection down there at that bottom price point. Okay, when you have a bar that has a wick on it, or like a reversal bar, okay, we'll see this bar, this down close bar had a wick on it, meaning the market pulled up. See the top price level? There's 0 here and 25 here. If there's a bar with a wick and one side has a 0 on it, you won't have a mini magnet. That means all the orders at that area were knocked out. There was nothing else left there. But notice this reversal bar has this white line, mini magnet on it. But look at the orders at the bottom of that wick. 343 and 38. Okay? Meaning there was orders there still. It didn't knock out every order that was there. Meaning, look over here. See this bar that had a wick? See, there's a 0. So there was no mini magnet. Anytime there's a non-zero number, it's going to create a mini magnet there. Okay? And when there was unfinished business still left there and it leaves a mini magnet, mini magnets normally create like a springboard. Okay? Does that make sense? Mini magnets normally create like a springboard for the market to push off of and also come back to. So not only are we just taking advantage of a TX trade, okay, we're also making it kind of create its own springboard there to push off of. Okay, so we want it to either have a mini magnet or a Paul. Okay, a Paul print, for example, is this goldish line here. A Paul print designates a very weak price level. And you can kind of see it yourself in here, right? Like we see that there was exhaustion down here at the bottom of this bar because look what the orders did. 349, 268, 68, 10. We see that drop off, right? But we also see a huge drop off at this price level. Because look at this side. You had hundreds and hundreds and hundreds, 0. Here you had hundreds and hundreds, 10. Like there was a lot of weakness right here at the bottom of this bar. So it also created a Paul print. Okay. Well, that's what a Paul print stands for. It's a weak price area. So not only do we have trapped orders and we have an exhaustion box on the bottom of this bar, we have a literal weak price level at the very bottom price cell of this bar, creating this Paul print that again kind of gives a springboard. Okay, so does that make sense? So it's not just the trapped order and not just the exhaustion box, but we either want a Paul print or a mini magnet as well. Okay, so we're kind of combining, we're stacking the odds here. Now, another rule to take an elevator trade or a coil chop trade is there has to be a cluster. The cluster is this yellow cell. There has to be a cluster either on this bar or on this bar. One of these two bars has to have a cluster. Well, what is a cluster? Well, a cluster signifies a fight. It signifies a lot of orders have come in, right? Okay. And so we want to see a fight. So just step out of this for a minute and focus here. What's the very first thing we have to identify and see before we even think about taking one of these trades? We have to see that there's a possible start of a new trend. There's a push in a direction. Think about the mountain example, running up the mountain. You have to start the run up, right? You have to start going up the mountain. Then you kind of take that breather and then you go back and go higher, right? But notice here, why is this cluster important? Why is that one of the rules? We stay out of coil chop unless these certain things line up. Well, look at kind of what happens on the way up here. So we're coming up, we're coming up, we're coming up. Look at this bar. So we're in an upward momentum. Look at the left side of this bar. That shows the orders that were sold right here, right? Number of orders sold is on the left side. What do you see there? 1, 13, 24, 49. Pretty weak, right? What do you see on this bar? 238, 821, 541, 700, 596, 700. That's a lot of sell orders coming in here, isn't it, guys? You see that big difference? I mean, clearly. So there's a push up. Then there's a war that comes. There's a battle. Can you see the battle? I mean, look right here. This up close bar, buyers and sellers all together, was 1,834 orders. This next bar up, 2,000 orders. Next bar up, 6,800 orders. Next bar up, 530 orders. Boom, 9,150 orders. Do you see all this push to sell? That fight, that cluster, that yellow cluster there gives you that heads up. There's a war, there's a battle, right? Do we want to be on the winning side of the battle or the losing side of the battle? Well, the strength in the market was already pushing up, right? That's where the strength was. The battle was being won going up. Everybody agree with that right here? That's where the battle was being won going up. A big battle came in here. What does this tell you down here? And this bar closing up. When a big war starts, a big battle comes in, pushes it down, right? The battle pushes it down, and then it comes back up and closes up. And when it closes up, the bottom of the bar has what? An exhaustion box and trapped sellers. So we know just in general, we like that. But it's up, down, up. It's cold chop. We don't want to take it. Well, we also saw the cluster to let us know it was a big enough battle for us to pay attention. Because just a regular up, down, up doesn't mean much. But when there's a cluster on this bar or this bar, it shows us there was a big enough battle there to mean something. Okay? And not only do we have the exhaustion box and trapped orders and the yellow cluster battle, what do we have right here? A paw print showing what? Weak price sell at the bottom. Think about that for a minute. You see this push up, you see this huge battle, this crazy number of orders coming in to go down, 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 down. And then look where they ended up. This bottom price sell had 0 buyers and only 10 sellers. Look what was going on up in here. 800, 500, 700, 5, and 10. That battle was lost. Do you see that? So we're combining several things here, not just a standard standalone filtered TX. We're combining it with the strength of the cluster battle and either a paw print or a mini magnet early in the trend. How would you feel about risking your live money if you saw this strong of a battle? Okay, everybody understands that's a strong battle, right? Everybody agree? How do you feel about that strong of a battle coming at you way up here? Compared to at the start of a trend. You see it? Think about yourself running up that mountain. You've ran up, chilled, ran up, chilled, ran up, chilled, ran up, chilled, ran up, chilled. Then a big old wind comes against you. You can handle that wind and keep on going a lot better back here than you can way up here when you're just out of breath, out of strength, and you're about done, right? Make sense? So we only want it early in the trend. We want it to have the TX setup that we're used to of an exhaustion box and trapped orders. We want there to be a paw print or a mini magnet because that gives us even more confidence that that bottom area is weak and we have something to spring off of. We have a paw print to spring off of, or we have a mini magnet to spring off of, and the cluster lets us know there was a big enough battle there to push off the other way. It wasn't just a little hiccup, it was a battle, and they lost. So we've still got some steam in us. Okay? And again, we want that paw print, or we don't want to just oh, just because there was an up close and then a down close, we took it just in the middle of nowhere. We want something to spring off of, just like that swimmer right in the middle of the lane wants to change directions, compared to, did they get to the other side and with some strength push off the edge of the other side and have something to push off of? Okay, meaning kind of create its own launch pad with that mini magnet or that paw print. Okay, so we're adding some, several things together here. So let's take a quick look at this chart. We know that the gold detectors is what tells us there's a, potential elevator there. So the first one is right here. Technically, this is an elevator. I'm not saying it meets the rules to take the trade, but it's an elevator, right? Because market's coming down, one bar up, one bar down. There was actually a cluster on both bars. That's okay as well. The cluster has to be either on this bar, or can be on both bars. So that shows us there was a good fight here. A double fight, right? But this bar still closed down, had a trapped orders and exhaustion box on the top, and had a what? What's at the top there? A mini magnet, right? So that's why it created a detector letting you know, hey, that's technically an elevator. And this one would have worked if you took it. But according to the rules, should you have taken this trade? After this market has come down, 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 pulled up, come down, 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 down. That's a little late in the trend. Yeah, it worked, but does that make sense late in the trend? Because you're like, well, that wasn't like hundreds of points. No, but yeah, you see what I mean, right? Now, where's the other golden one on the chart? Okay, well, look, this market came down, pulled up, came down, had a little hiccup, came down. Notice something. What do you see about this trend right here? Who can tell me? This push compared to this push, ODD. You saw where that trend lost half of its steam in that second push down, right? So that kind of gives you a little bit extra confirmation to say, now we've got this push up. And notice this trend down, it came down, then pulled up and made this high, came down, pulled up and made this high, came down, and it pulled back up and broke that last high even. So here the market pushes up. We've got a down close bar, and then an up close bar. We have our yellow detector. Would you consider this to be possibly the beginning of a trend? Early in the trend, that little breather and go. And yes, and so this bar closes up. It's got an exhaustion box. It's got a trapped order. And then, but if it only had an exhaustion box and trapped order, would we take the trade? If it was a regular, standard, filtered TX with an exhaustion box and trapped order, would we take the trade? No, because if it was just a regular TX, we consider this coil chop and we stay out. What makes the difference here? Three things. One, early in a potential new trend. Two, what's this yellow right here? Cluster. So we had a fight, right? And then three, on this bar back in the trend direction, there's a paw print. Makes sense? So stepping back, and instead of thinking about this elevator trade is a whole new trade you got to learn all these different rules to, just think about your normal TX trade, and you know those rules, And in your normal TX trade in a trend, you can't take coil chop, right? All you're doing is saying, I now can take a trade in a TX trade in coil chop if three extra things happen. One, start of a new trend. Two, cluster on this bar, or both. Three, got to be a paw print or a mini magnet. That's it. Does that help simplify this trade? Because I know especially those of you that are new, you're like, oh, this is some other complete new different trade. Like this elevator, I don't get it. Just think of it like your normal TX trade. I want a trending market. I want to go with the trend. And there's got to be a TX, meaning a trapped order in X box. That's it. Oh, I can't take them. It's coil chop, up, down, up. Unless it's three things. New trend, cluster on one of them or both, and mini magnet or paw. That's it. Okay, so yes, double cluster is okay. Okay. So is that clarified a little more where it's not really so overwhelming? Somebody says, well, hey, what about the bottom of a range? We don't take them in range bound markets, just in the start of a new trend. Okay? That makes sense? So it's not some new, overwhelming, scary, gosh, another trade to learn. It's the same trade. It's just one of your normal rules that says you can't take them. You actually can. If it's early, cluster, paw, or mini magnet. Does that help you kind of? And then the detector for them is gold. Okay? Makes sense? So, does that help clarify a little bit? Exactly. It's a trend continuation trade. Okay? So, once again, we're combining together more probabilities so that we can take this trade in coil chop. So again, early in the trend, not just exhaustion boxes, but paw or mini magnet. Now, guys, real quick here. Okay. This is the biggest mistake I see people make with this trade. So hold on to any of your questions or comments for just a second and pay real close attention here. Okay, I even reached out to Lori earlier and I was like, Lori, what are one of the biggest things you would want me to cover on tonight's webinar? Because Lori's in the room a lot. Lori calls out a lot. Okay, Lori handles and manages all of the mentor groups, which we'll talk about next week, how you can get in one of those with Lori. I said, what's the biggest thing that you see confusing about this trade? She said this right here. So yes, when those things all combine, you can take a trade that's in coil chop, but not in choppy range. Do not confuse in your head saying it's okay to take coil chop if these other things line up. That does not mean in choppy range. There has to be a start of a trend, an initial push, that initial run up the mountain that you're making, then that little pullback and go. It cannot be in chop. It can't be in 2 to 3 bar chop. Do not get that confused. This trade is not a chop breakout trade. I've seen people say, oh, look, we're in a choppy range. We're in a choppy range. Couple bars up, couple bars down, couple bars up, couple bars down. Oh, look. There's one. There's a cluster. There's a TX. There's a mini magnet. Let's go. No, this is not a chop breakout trade. Where do you see one right here? Where's the gold detector? See it? Down here. And what do you see right here? Oh, look. Here's down closed bar, up closed bar, and then this down closed bar, there's clusters, there's trapped order and exhaustion, and there's a mini magnet. Let's go short. Now, granted, you should have taken that one anyway because you're going into some crap, but do you see a big difference? Look at this. First of all, you're coming up, you pull down. You're coming way up, you pull down. You're coming up. First of all, that's way late in a trend, right? So you shouldn't even be looking for it, right? But what do you see right here? We've got an up close bar, down close bar, 2 bars up, 2 bars down, 1 bar up, 1 bar down. You're in some choppy crap right there. You do not take these as a, do you see what I mean now? Where some people confuse these as, oh look, it's up, it's down, it's up, it's down, it's up, it's down. Oh, that means chop break. John taught about how we can take choppy trades with this. No, I didn't. Not in choppiness, not in a choppy range, not in choppy crap. Yeah, Horatio, right? Oh, Mike Darty says, gotta go. The tornado warning in Dallas. Mike, you go and buckle up, board up, stay safe. Give us an update in Skype later. Let us know you're okay, buddy. You stay safe in the weather there, man. Go for it. Does everybody see the difference in this screenshot right here? Compared to the ones I showed before. I mean, does that make, you see this crap you're in? Crap? Compared to just, and I'm not saying this is a perfect example, compared to push up, 1 bar down, and go. Beginning of a trend. First part of a trend, take a little breather, go. This right here, this first, you running up the mountain, doing your little jog up the mountain, up the hill, taking a little breather and go. That is a complete different world than up and 1 down and a couple up and a couple down. You get it? Ick. Yeah, Seth, exactly. As Lori calls it, ick. This is the biggest #1 mistake that most traders make on this trade, because you confuse it in your head. I can take trades in coil chop. No. You can take a trade at you can take the start of a push, the start of a trend, the first coil chop early in the trend that meets all the rules. You can't trade in crap. Got it? Okay. So, yes, in coil chop with a cluster on the setup bar or the bar before. DR is not required for this trade. The trade does not have to match the direction of DR. Okay? And the detector is gold like we showed on the chart. Your normal rules apply. The obstructions don't change. Don't trade into a deviation level, a wall, a stack, flux level, dynamic magnets, okay? Your normal stuff like always, okay? Perfect example. Boom, 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 bam, bam, bam. Nice trend, man, right? Push down. What happens? Got a bar back up, and then this push down. Well, you've got your gold detector there because what? There's a cluster, trapped order, exhaustion box, paw print. What happens? Bam. For one, I don't like it because what it's going into. But for two, that is too far into a strong trend. So yeah, don't take it because of the stacks, but that is a good push. You don't want that. right? Everybody see that? You don't want that. Too far into a trend. How about this one? Down, 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 down. All right, pop up. Nope, get rejected off of some existing levels with what? Got your gold detector, got double clusters, popping off. This one has a paw print and a mini magnet. And you've got enough room to get 2 bars before you get to this level. Does everybody see the difference there? That last screenshot was like doo-doo-doo-doo-doo-doo, and it's way down here. Do you see this? The first push of a new possible direction. Wait, get rejected. Nope, we're going. Very clear? Okay, I'm not trying to go on and on here, but I want you to see examples of this yes, that no, here's why, you got it. Okay? All right, and your entries are like every other trade, right? Enter a tick above or below, your stops on the other side, take profit 2 bars later, and so on. Okay? Did that help clarify this trade? How many of you went into this webinar going, oh geez, that elevator thing, man, that's going to be a whole new trade for me to learn? It's really not. If you just keep those 3 things in mind, guys. Start of a trend, got to be a cluster on one of them or both, Paul or mini magnet. That's it. It's really not a new trade. It's just a new, it's adding on layers of probability to go ahead and let you take the trade. It's a continuation trade. Okay, good. Seth said, man, there was some aha moments in there. Good, 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 because that's all it is. So I hope that helped, because that's what we're doing here. That's literally the title of this webinar, right? Simplifying the trade. And that's all I was trying to do, is help simplify it for you there. Theo says, what's the recommended ATM for the elevator trade? Same as all the other trades, okay? Now, it depends whether you're trading a 10-tick chart with NQ or an 8-tick chart with ES, but it's the same exact as all the others, okay? I'm just double checking here. No, Daniel, the detector will not show gold without a mini magnet or Paul or a cluster. Okay, it might still show the standard detector of a TX. You know, if there's a a trapped order and exhaustion box on there, but it won't show gold unless it's truly coil chop, up, down, up, down, up, down, or if there's, you know, not a cluster, or if there's not a mini magnet or a Paul. Okay, and keep in mind, guys, just because a gold detector pops up saying, hey, you know, elevator, doesn't mean it's a valid trade to take, right? You still have to look at it and say, is it in the beginning of a trend? Is there stuff in the way? Okay. Yes, the detectors are not part of the trading assistant. They're part of the normal chart template. Okay. And again, these are scalp only trades. You can learn later on how to go further than that. Okay, guys, we went a little bit over an hour here. Hope that was helpful. Now you know what those gold detectors are on your chart. Now you understand how you can actually take trades in coil chop, or what we call a 1-bar pullback, or elevators, right? Okay, guys, listen, once again, tomorrow, be careful if you're trading tomorrow. Be careful if you try to trade Friday. Guys, if you insist on it, trade in demo. But you know what? Take some time. Be with the family. Watch some videos. Have a great one. And if I don't talk to you before Thursday, guys, have a very, very safe holiday. Have a great Thanksgiving with your family. Once again, it's just I want to say a big thank you, to those of you that are new and joining us in, the free trial right now. We have loved having you guys in here. We've loved having you in, the Elite Trade Room every day. We've loved you being on these webinars. I hope you can see how much work we do put into our members. Um, you know, Daryl and Lori every day in the room, and you know, I'm not in there as much as I'd like to be, but I try to put in here into the webinars. But I hope you see way beyond me and Daryl and Lori, and you realize the Apex community in general. I mean, everybody in the Skype rooms that help each other out, like 24/7. Everybody in the Elite room. This is not about me and Daryl and Lori. I mean, this is about the community. And Apex would not be here. We would not be who we are. We'd not be what we are. We would not be able to have a 23-hour-a-day trade room or all these Skype rooms without these other traders. That's what we call THT, traders helping traders. And, so yes, thank you for those of you that are new being part of this. But guys, our existing members, our trade leaders, our veterans, thank you. Like, as we look ahead here to Thanksgiving, I'm very thankful for you guys, all of you. We couldn't do it without you, everybody helping out. Really appreciate it. I've seen many of you get a lot of help from other traders, and that's what it's all about. We all get into trading because we want to work for ourselves, right? Not have another job. And we can work for ourselves, but we don't have to work by ourselves. Like, we can be a part of a community and part of something, help each other out, critique each other, help each other grow. And that is something I am very thankful for, is for you guys as we go into this holiday week. So once again, guys, have a great one. Happy holidays to you and your family. Be safe. And we will see you Saturday. Okay? Remember, Saturday webinar, 1 o'clock. I'll be on. We'll dive into the next one, try to break it down for you. Have a great one, guys. Good night. Happy holidays. Don't eat too much turkey. All right, guys. Oh, don't forget, take advantage of those specials. Hop on and check out the specials. Get signed up. You just have to go to the home page. Go right up here to sign up for any plan or product. Sign up for one of the specials. If you've got free time left, send us a ticket. We'll add it on. All right, guys. Happy Thanksgiving. Theo, awesome. Glad to have you on as a lifetime member, Theo. That is great, man. Welcome to the family. Okay. Horatio, at least December 4th. Okay. All right, guys. Good night. Thank you so much for being on.